Hello everyone, welcome to RBI Grade B 2026 Top 100 MCQ series. And over here we are going to discuss MCQs with respect to finance, right, in today's class. And before we begin the session, I hope my voice is audible to everyone. Give me a thumbs up if the audio, video, everything is fine. All right, so there is no issue with the audio, so let us continue. So basically, as a part of this session, we are going to discuss MCQs with respect to this subject finance, and there will be certain PYQs also, and whatever MCQs we are going to discuss, they are related to PYQs only, so that basically in the best possible manner you can revise whatever you have prepared with respect to different chapters when it comes to finance. So that is going to be the objective or the agenda behind this session. Now before we begin the session, just a small announcement. If you're somebody who is preparing for RBI Grade B examination, then this guidebook can be helpful for you. As a part of it, you are going to get the previous year questions with respect to RBI Grade B examination, and it will give you a good idea that what has been the trend and pattern with respect to the RBI Grade B exam, right? So all such sort of things you are going to get as a part of it. So go to description box, click over the link, and from there you can download it. I hope it is clear to you. Now moving forward, let us begin. And before that, this is the schedule that we are going to follow. So today is 30th of June and we are discussing top 100 MCQs with respect to finance. On 1st of July, that is on Wednesday 2 p.m, you are going to have another class which is related to top 100 MCQs with respect to management. I hope it is clear to you. So let us move on to question number 1. So the question number 1 is, four friends have different cash flow patterns where we have Neil, Ria, Arjun and Karan. So Neil receives rupees 25,000 as house rent every month. Ria receives rupees 15,000 every quarter from her systematic withdrawal plan SWP. Arjun receives interest on his savings bank account every 6 months, whereas Karan makes a one-time payment of rupees 10 lakh to purchase a car. Now the question is, which cash flow is not an example of an annuity? Which cash flow is not an example of an annuity? Option A, Neil. Option B, Ria. Option C, Arjun. Option D, Karan. Option E, all of them are examples of annuity. So take your time, try to solve this question, mark your answers in the chat box. So basically, if I talk about annuity, right, if I talk about annuity, so what do you mean by annuity? Annuity means a series of cash flow that is received or paid at what? The keyword is regular intervals, that is received or paid at regular intervals. Now if you see all the options over here, we can easily see that if you talk about Neil receives rent of rupees 25,000 every month, right? So it is in regular interval. If you talk about Ria also, she is also receiving rupees 15,000 every quarter as a part of her SWP, which is again a regular cash flow, right? If I talk about Arjun also receives interest on his saving bank account every 6 months, so this is also regular cash flow. But if we talk about Karan makes a one-time payment only, right? He makes a one-time payment only to buy rupees 10 lakh car, right? So since this payment is made only once and is not being occurred in a regular interval, so that is why it is not going to be an example of annuity, right? So that is why in this question D is going to be the correct answer, which is Karan. I hope it is clear to you, right? Now moving on to question number 2. A person deposits rupees 1,000 in a bank. If the amount becomes rupees 4,000 in 24 years under the annual compounding, then what is the approximate annual rate of return? So I'm repeating the question. A person deposits rupees 1,000 in a bank, and if the amount becomes rupees 4,000 in 24 years under annual compounding, then what is the approximate annual rate of return? Now take your time, try to solve this question. If you're watching the recording, you can pause the video and then you can try to solve it. So basically you can solve this question using two methods. Method number 1 is going to be a lengthy method, right? Over there you will be requiring calculator also. It will be requiring a lot of calculations. For example, you can simply use this formula, which is formula for annual compound interest, right? Which is A is equal to P into 1 plus R raised to the power T, right? So you can put the values over here. So it is going to be 4,000 is equal to, principal is 1,000, into 1 plus r raised to the power 24, and after that you can divide it, right? You can I would say divide both the sides by 1000, and based on that you can derive the values over here. So it is going to be 1 plus r plus 1 plus r raised to power 24 is equal to 4 if you divide both the sides by 1000, and later on basically you can take the 24th root of both sides in order to solve the value of r, right? You can derive the value of r, and that's how you can reach the answer. But let me tell you, it is going to be a lengthy method, and manually you cannot do it. You will need the help of calculator also in order to solve this answer. So we are going to use the second method, which is basically the rule of 72, right? You must have heard about rule of 72, which is a quick mental math shortcut. So over here what you can do, if you talk about the amount grows from rupees 1000 to rupees 4000, right? So which means what? It basically means that the money is increasing by 4 times, right? Means the money becomes 4 times. Now when this 1000 becomes 4000, right? So how it is getting increased? Firstly, the 1000 is getting doubled to 2000, and the 2000 is getting doubled to 4000, right? So which basically means that the money takes how many years to get double twice? It basically takes 24 years, right? So how much time one doubling is going to take? So if you talk about one doubling is going to take how much time? It is going to take 24 divided by 2, which is of 12 years, right? Now if you try to apply rule of 72, so as per rule of 72 we know that rate is equal to what? Rate is equal to 72 divided by the doubling period that is there, right? So in this case 72 divided by what is the doubling period? We know it is 12 years. So 72 divided by 12 is equal to 6, which is going to be 6%, and this is the rate which is going to be your answer. So B is going to be the correct answer to this question, right? So this is a better way to calculate this rate by using the rule of 72, which is the ratio of 72 divided by doubling period, right? So I hope it is clear to you. 6% is going to be the answer to this question. Now moving on to next one. The next one is question number 3. So question number 3 is also very similar to question number 2, and it says that an amount of rupees 2000 at 8%, an amount of rupees 2000 at 8% becomes 4000. Find the number of years that are required using the rule of 72. So question says directly that you can apply the rule of 72 here also, and you have to calculate the number of years in this case, right? So if you try to put the values over here, first of all you can take your time, try to mark your answer by pausing the video. So those of you who are live, you can attempt the question and you can write your answer in the chat box, right? So over here if we see, the question says that the amount becomes 2000 to 4000, right? Which means the account is getting doubled. Now if we try to apply rule of 72 over here, so time is equal to what? Time is going to be 72 divided by what? Divided by rate of interest, right? We have used the previous formula only. We have just reshuffle, we have basically swapped the terms, right? We have swapped the denominator with the numerator. So you can see through that we can calculate the time, which is 72 divided by rate of interest. So 72 divided by what is the rate of interest? It is 8% in this case. So 72 divided by 8% is going to be what? It is going to be 9. So the time is going to be what? Time is equal to 9 years, which basically means that 2000 will become 4000 in what? In 9 years. At what interest rate? At 8% annual return. At 8% annual return. So that is why C is going to be the correct answer to this question, which is of 9 years. So I hope it is clear to you. Now moving on to question number 4. So question number 4 is 4 friends invested their savings in different financial instruments. 4 friends invested their savings in different financial instruments where we have Neil, Ria, Arjun and Karan. So Neil receives a fixed interest payment every year irrespective of the company's profit. Ria receives dividend only when declared by the company. Arjun receives ownership percentage in the company. Arjun's ownership percentage in the company decreases when the company issues additional shares, and Karan's return varies depending on the company's profitability. Now the question is that which of the above represents a characteristic of a bond and not of equity, right? So if you see the characteristics of bonds, we know that in case of bond, basically bonds generally provide fixed interest payments, right? We know that they provide fixed interest payments, and these payments are provided at the regular intervals. We already know that. and the interest that is paid in this case, it is going to be paid irrespective of the company's profit get increased or the profit get decreased, does not matter, right? Bondholders, they are going to get paid, right? The fixed interest is going to get paid in this case. But on the other hand, if you talk about equity, in case of equity, we know that shareholders that are there, they do not receive fixed return in this case, right? And equity shareholder, they basically receive the dividend in this case, and their return depends upon the company's performance, right? That is a scenario. This is the basic clarity that we have. Now if you try to align this concept with the options that have been provided, so you can clearly see that in this question A is going to be the correct answer, which is nil, because if we see the nil scenario, we can see that nil receives fixed interest payment every year irrespective of the company's profit, which I told you is the characteristic of bond. Rest of the scenario, if you see in case of RIA receive dividend only when it is declared, right, which is a characteristic of the equity. Arjun's ownership percentage in the company decreases, which is again ownership is related to equity, right? The equity dilution is happening over here. And option number 4, current return varies depending upon the company's profitability, which is again an equity characteristic. So that is why A is going to be the correct answer to this question. I hope this is clear to everyone. Now moving on to question number 5. There are various types of bonds in the same regard. Identify the bond which does not give any coupon payment, and such bonds are called as dash. So there are different types of bonds in the same regard. Identify the bond. We have to identify the bond which does not give any coupon payment, and such bonds are called what? So basically, if you look into the options, option A is no coupon bond, option B is annuity bond, option C zero coupon bond, option D is debenture, and option E is all of the above. So pause the video, try to mark the correct answer. So over here, the correct answer is going to be what? The correct answer is going to be the C option, which is zero coupon bond, right? So zero coupon bond is going to be the correct answer to this question, because when we talk about zero coupon bond, we know that it is a bond that does not pay regular coupon or interest during its lifetime, right? We already know that, and it is issued at a discounted price and redeemed at the face value on its maturity. So for example, if there is an investor, right, and let us say if the bond is issued at rupees 800 and redeemed at rupees 1000, so investor is going to earn 200 as return, right? So this bond does not give any coupon payment, right? Which does not give any coupon payment is considered as what? It is considered as zero coupon bond. So C is going to be the correct answer to this question. So how the investor is earning? He is earning through the difference between purchase price and the maturity value. So C is going to be the correct answer to this question. Now question number 6. Question number 6 says Mr. Arjun is there, and Mr. Arjun wants to invest in a government security that will provide him with fixed annual interest for life. So what he is getting fixed annual interest for life, but he is not concerned about receiving the principal amount back. So he is not concerned about the principal amount back, as the security never matures. So the third thing is that security never matures. Now tell me, which of the following security best matches his requirement? So option A, British government bond with a long maturity and fixed coupon. Option B, British government bond with a short maturity and fixed coupon. Option C, a consol bond with no maturity and a fixed coupon. Option D, a British government bond with a longer maturity and floating coupon, and option E, a British government bond with a short maturity and floating coupon. So if you see it over here, firstly, he is looking for fixed annual interest for life. Secondly, he is not concerned about principal amount back, and the security never matures, right? So this is important. So based on that, if you see the answer to this question, C is going to be the correct answer, which is going to be the consol bond, right? Because consol bond is a bond with no maturity. It is a bond with no maturity and a fixed coupon, right? And this is what Mr. Arjun is looking for, because consol bond is a kind of perpetual bond. So no maturity date is there, no I would say if we talk about the coupon is also fixed, right? Interest payment is fixed, and there is also no compulsory repayment of principal amount. So that is why C is going to be the correct answer to this question. That is going to be the most appropriate one. If you see the rest of the options, you can see over here they are having maturity, but he was looking for the security that never matures, right? So over here you have longer or the shorter maturity, so those options are not appropriate. So C is going to be the correct answer to this question. Moving on to question number 7. So there are different types of bonds which are issued in the financial market. In the same regard, identify the type of bond which matures multiple times over a period of time, which matures multiple times over a period of time, and it can also be redeemed multiple times. So this is an easy question. If you have read this chapter in a proper manner, you would be knowing that basically over here we are talking about the serial bond, right? Because when we talk about serial bond, it is a type of bond in which basically the total bond issues is repaid, that is issue is repaid in parts at different dates, right? Instead of being, I would say, repaid fully on a single maturity date. So that is, I would say, the proper or the main characteristic with respect to the serial bond. So this is a type of bond which basically have multiple maturity dates, multiple maturity dates. And the second key feature is that the different portions of this bond, they basically are redeemed at different times, right? They are redeemed at different times. So that is why A is going to be the correct answer to this question, because it can be said that it matures multiple times over a period of time, right? It matures multiple time over a period of time, and this is what the question is asking. So A is going to be the correct answer to this question. Now moving on to question number 8, which is related to yield to maturity, right? So question is, it says that yield to maturity, which of the following statements regarding yield to maturity is correct? So yield to maturity assumes that coupon payments are not reinvested. Option B, it assumes that coupon payments are reinvested at the bond's yield to maturity. Option C says that it assumes that coupon payments are reinvested at the discount rate. Option D, it assumes that coupon payments are reinvested at the firm's cost of capital. And option E is none of the above. So take your time, try to mark the answer to this question. Yes, for the question number 8, do write the question number also when you are attempting it in the chat box. Yes, regarding question number 8. Okay, so if you talk about yield to maturity, right? Yield to maturity is the total expected return from a bond if it is held till maturity, right? Now, one important assumption regarding this yield to maturity is that all coupon payments that are received during the bond's life, they are reinvested at the same yield to maturity rate, right? At the same yield to maturity rate. Therefore, if a bond has, let us say, yield to maturity of 8%, so it assumes that each coupon that it will receive, it will be reinvested at 8% only, right? And this is something that is aligning with option number B, which says that it assumes that the coupon payments are reinvested at the bonds yield to maturity, right? So this is going to be, the B is going to be the correct answer to this question. I hope you were able to mark it correctly. Now moving on to question number 9. Question number 9 says that calculate the price of zero coupon bond. Calculate the price of a zero coupon bond that is maturing in 5 years, has a par value of rupees 2000 and a required yield of 10%. So option A is 1234, option B 1242, option C 1322, option D 1412, and option E is 1512. So you just have to apply the formula. If you know the formula, you can easily mark the correct answer. Take your time. Okay, so you just need to know this formula, which is zero coupon bond price is equal to m divided by 1 plus I raised to the power n, right? So here m stands for par value, that is there, right? So you can say bond price in this case is equal to par value divided by 1 plus r, or you can say 1 plus I raised to power n, right? So in this case, what is the par value that is given? Par value is given at 2000. So we are going to write 2000 over here, right? Then the next thing is required yield. Required yield is of 10%, right? So you can write 10% as point, I would say 0.10, right? And if you add it over here, 0.10 plus 1, it is going to be 1.10, right? Raised to the power n. So n in this case is 5 years, right? It is maturing in 5 years, so it is going to be raised to the power 5. So bond price is equal to 2000 divided by 1.10, 10 raised to the power 5. Now over here you can do the calculation, right? I'm not going to use the calculator. तो ये थोड़ा आप कर लेना calculate. I'm just going to tell you the answer, and through that you will be able to reach the answer. So 2000 divided by 1.10 raised to the power 5. तो ये किसी ने कर लिया हो calculate तो देख लेना. And I'm just going to tell you the answer over here. The answer is going to be the B option, right? So if you will calculate it, the answer is going to be 1242 rupees, right? 1242 rupees. So that is going to be the answer. You can calculate it by yourself. तो ये कर लेना, ठीक है, आराम से. So let us move on to next question, which is question number 10. Now the question number 10 says Neil purchases gold futures contract to hedge against a rise in gold prices. Over the next few weeks, the value of his futures contract changes because the price of the gold changes. So Neil purchases a gold future contract to hedge against a rise in gold prices, and over the next few weeks the value of his future contract changes. Because why it is changing? Because the price of the gold changes. So you have to tell that the value of Neil's future contract is derived from what? Option A, it is derived from the price of the underlying gold. Option B, it is derived from the expected inflation rate. Option C, the nominal interest rate. Option D, the future GDP growth rate. Option E, none of the above. So what is going to be the answer to this question? It's a very easy question, right? So we know that if we talk about the future contract is a type of derivative, and derivative, we know derivative gets its value from what? It gets its value from an underlying asset. We already know that, right? So in this case, what is the underlying asset? The underlying asset is gold, right? It is gold. Therefore, the value of Neil's gold's future contract, it will change because of what? The price of the gold only, right? So that is why gold is the underlying asset in this case. So A is going to be the correct answer to this question. It is not going to be B, right? It is not going to be expected inflation rate, because inflation no doubt that it can indirectly affect the price of the gold, but the future contract is not directly derived from the inflation, right? It is derived from the price of the gold only, which is the underlying asset, right? So that is why A is going to be the correct answer to this question. The same rule applies to the nominal interest rate also. Nominal interest rate, it can also affect the market pricing, but the main source of value is what? The main source of value with respect to this derivative is the gold price, right? Which is the underlying asset. So that is why A is going to be the correct answer to this question. Rest of the options have been written just to confuse you. So I hope it is clear. So moving on to question number 11. Question number 11 says derivatives are financial instruments to hedge risk. It derives its value from which of the following? Now this is something that I just told you. You can mark the answer easily, right? So option A, exchange determined. Derivatives are financial instrument to hedge risks. It derives its value from which of the following? So option A, exchange determined. Option B, fixed by SEBI. Option C, underlying. Option D, market determined. Option E, none of the above. So we know that if we talk about derivative value determined by underlying asset, right, which can be share, which can be bond, it can be any commodity, currency, interest rate, market index, right? So that is why regarding this, C is going to be the correct answer to this question, right? It is going to be the correct answer to the question, not the A one. It is going to be the C. C is going to be the correct answer in this case, right? So moving on to the question number 12. So question number 12 is a numerical, an easy one. Just try to solve it. Take your time. A person enters into two trades. In the first trade, he buys stocks at the spot price of rupees 500. So what he has done, he has purchased a stock at the spot price of rupees 500 and sells it at rupees 550. Okay. And in the second trade, what he is doing, he buys a future contract at rupees 500 by paying 25% initial margin. Now this is very important because 25% is the initial margin that he has paid, and later sells it at rupees 550. So what would be his profit percentage in trade 1 and the trade 2 that he is incurring, right? So option A, 10% and 20%, 20, 10 and 40, 10 and 10, 20 and 40, E, none of the above. So take your time, try to mark the answer to this question regarding question number 12. Yes. So try to mark your answer. Trade 1 and trade 2. So trade 1 is done where? trade 1 is done as a part of spot market, right? And if I talk about trade 2 is done as a part of what? It is done as a part of future contract, so we can say future market. Now if I talk about trade 1, right? So over here, first of all, what values have been provided? The spot price of rupees 500 is there, right? So this is going to be the purchase price of rupees 500. Then he sells it at rupees 550, so the selling price is going to be rupees 550, right? So if you calculate the difference between selling price and the purchase price, so you will be able to calculate the profit, right? So the question is asking about profit percentage, so that is why what we are doing, we are calculating the profit. So profit is going to be what? It is going to be 550 minus 500, which is going to be what? Which is going to be rupees 50 in this case, right? Now what the question is asking about? Question is asking about the profit percentage, so we can calculate it very easily. Profit percentage is going to be profit divided by, I would say, purchase price, right, into 100. So you can say 50 is the profit, purchase price is the 500 rupees, basic quants, right, into 100. So it is going to be what? It is going to be 10%. So trade 1 is profit percentage is going to be 10%. Now if you calculate it with respect to trade 2, which is related to future market, right? So this can be a bit trickier one. So over here, first of all, it is saying in the second trade, he buys a future contract at rupees 500 by paying 25% initial margin. So what is the future contract value? Future contract value in this case is rupees 500. What is the initial margin he has paid? Initial margin paid by him is 25%. So 25% of what? 25% of rupees 500. So you can calculate it as 25 divided by 100, right? Because it is 25% into 500, right? Which is going to be what? Which is going to be rupees 125, right? So this is the actual initial margin that he has paid in absolute numbers, right? Now what we are going to calculate, we are going to see the selling price also in this case. So in this case also the selling price is rupees 550 only, as provided in the question, right? So what is going to be the profit? So the purchase price was rupees 500, selling price is rupees 550. So profit is going to be what? Profit is going to be 550 minus 500, right? Which is going to be what? Which is going to be rupees 50, right? But the actual profit that is there, we are going to calculate it based on what? We are going to calculate it based on the initial margin that he had already paid, right? So the profit that we are going to calculate on the margin that he has paid, what it is going to be, right? Because this is the amount that he has paid, right? Not the full contract value. So based on that only we are going to calculate the profit percentage. So in this case, profit percentage is going to be what? It is going to be 50 divided by what? Divided by the initial margin that he has paid, so which is 125. So it is going to be into 100. So you can say 50 by 125, 50 25, and it is going to be 4, right? So it is going to be what? It is going to be 40%. It is going to be 40% in this case. So trade 2 profit percentage is going to be what? It is going to be 40%. I think my face is visible over here. So I hope everybody is able to understand what I have written. So if you're not able to see it, what we have done, we have just calculated profit percentage by dividing 50 by 125 into 100, which is nothing but the 40% in this case, right? So so trade 1 is going to be 10%, and here it is going to 40%. So 10 and 40. So B is going to be the correct answer to this question. I hope it is clear to everyone. I'm sorry about it. My face is visible over here in the live session, so but my face is not visible on my screen, so that's why I've written over here. But I hope you are able to understand what calculations we have done, right? So let us move on to the next question, which is question number 13. So question number 13 is, identify the type of option wherein the trader has the right to buy the security before the maturity. So identify the type of option wherein the trader has right to buy the security before maturity. This is an easy question, a very easy question, because the correct answer is going to be call buyer, because a call option gives the buyer the right to buy the underlying security at a fixed price, right? And the person who holds that right is called what? It is called as the call buyer, and this is what the question is asking, right? So that is why in this question A is going to be the correct answer, right? A is going to be the correct answer to this question. So moving on to question number 14. Given the price per share is 100, given the price per share is 100 and earning per share is 50. Find the P is to E ratio. So price per share is rupees 100 and earning per share is 50. Then we have to find P is to E ratio. So if you talk about P is to E ratio, right? So P is to E ratio is what? It is nothing but the market price per share divided by earning per share, right? Earning per share. So what is the market price? Market price is very easy. It is given as rupees 100. And what is the earning? The earning is rupees 50. So 100 divided by 50 is what? It is 2. So 2 is going to be the correct answer to this question, which is the E option, right? So I hope it is clear, an easy one. Now moving on to question number 15th. ABC Limited has earned substantial profit during the year. However, the company wants to conserve cash for an upcoming expansion project. So if you read the question carefully, it says it has earned substantial profit during the year. The company wants to conserve cash. So that is the second keyword. For an upcoming expansion project. So the company wants to expand, but at the same time it wants to conserve the cash. So at the same time it wishes to reward the existing shareholders. So just understand the scenario. It is earning profit, wants to conserve cash, it wants to expand, and it also wants to give reward to the existing shareholders without making any cash payment. Why is it so? Because cash conservation is one of its priorities. So which of the following actions would be the most appropriate for the company? So option A, issue bonus shares to existing shareholders free of cost. Option B, pay a higher cash dividend to all shareholders. Option C, issue shares after collecting the face value from shareholders. Option D, redeem all outstanding equity shares. Option E, buy back shares from the open market. So try to mark the correct answer to this question. Keeping in mind the instructions or the priorities that have been provided. So read the question carefully. Try to mark the answer. Okay, so if we try to summarize everything, first of all, this ABC Limited that is there, what it wants to do, it wants to reward the existing shareholders. Secondly, it wants to avoid any type of cash payment, right? And thirdly, it wants to conserve cash so that basically it can expand, right? So when it is expanding, it wants to expand, but at the same time it does not want to spend cash, it wants to conserve cash, right? So based on that, basically the best option or the most appropriate option should be A option, right, which is issuing the bonus shares, because bonus shares are issued to the existing shareholders and they are free of cost, right, out of company's accumulated profit or the company reserves, right, and they do not reduce the company's cash balance. So that is the best part about it. So it is going to be the most appropriate one. If we talk about the B option, we know that if they are going to pay a higher cash dividend to all shareholders, so it is involving cash, but we want to conserve cash, so this option is not applicable. Then issue shares after collecting the face value, so this is something that is not free of cost, right, because shareholders have to be paid money, so this is again, it does not fit. Redeem all outstanding equity shares, so equity shares generally I would say they are not redeemed like preference shares. It would also require huge cash outflow, so this can also be not the answer. Then buy back shares from the open market, so again buyback shares, they require company to spend cash, so this again goes the objective of conserving cash, right, which is the priority of the company. So that is why rest of the options are not going to be the answer, and A is going to be the correct answer to this question. Now moving on to question number 16th. So capital market facilitates issuance of new securities and trading. Which type of capital market facilitates IPO? Now this is a very easy question, question number 16th. So we know that if I talk about, okay, so the option A is primary market, option B secondary, option C primary and secondary, option D primary and forex, and option E none of the above. So the correct answer to this question is going to be what? It is going to be A option, right, which is primary market. So right? So primary market is going to be the answer to this question because company issues shares to the public for the first time, right, for issuing new securities. So A is going to be the correct answer. Now moving on to question 17th. Which of the following is a regulator of the capital market? I don't think any question can be easier than that. So you can easily attempt it. So the correct answer to this question is going to be, of course, SEBI. A is going to be the correct answer to this question, and I hope all of you have attempted it correctly. Now moving on to question number 18th. So this was supposed to be 18th, so wrong numbering is there. So ये 18th होगा, but चलो कोई बात नहीं. The question is there. So which of the following are depositories? NSDL, CDSL, CCIL, or CRISIL? So mark your answers with respect to this question. So I forgot to hide the answer over here. I forgot to put the animation, but I hope you'll be able to mark it. Just try to pretend that you have not seen the correct answer. And yes, so if I talk about the recognized depositories in India, we know that there are two such depository, which is NSDL, and secondly we have CDSL, right? So these two are there. So 1 and 2 is going to be the correct answer to this question. If we talk about CCIL, right, it is Clearing Corporation of India Limited, right? It provides clearing and settlement services, but it is not a depository. Similarly, if we talk about CRISIL, if CRISIL is a credit rating agency, it is a credit rating agency, right, which rates financial instruments and different financial companies, but it is not a depository at all. So that is why A is going to be the correct answer, which includes option 1 and option 2. Question 18th. Repo and reverse repo are tools used as part of liquidity adjustment facility. Which among them injects or sucks liquidity? So mark your answer for question number 18th. Yes, write your answers for question number 18th. So the correct answer is going to be the C option, which is repo injects liquidity and reverse repo sucks liquidity. We all know that, right? We know that as a part of the repo rate, banks, what they do, they basically borrow from RBI by selling their securities, right? By selling their securities, and they sign the agreement that they are going to repurchase the securities later, right? So RBI is going to give the funds to the bank, and through that what they can do, it can inject liquidity as a part of the economic system, right, as a part of the money supply. And on the other hand, the opposite of that is reverse repo rate, which comes into action while sucking liquidity, where RBI can park their surplus, where the banks can park their surplus money with the RBI, right? And RBI takes the money from the bank and it moves the money out of the banking system. So that helps in sucking liquidity as a part of the money supply. So that is why C is going to be the correct answer to this question. Now moving on to question number 19th. Treasury bills is a financial instrument which is a dash. Corporate issue securities, RBI securities, government security issued by RBI for managing short-term funding requirements, security issued and managed by the government, or option E, none of the above. So mark your answers for question number 19th. Okay, so when we talk about treasury bills, we know that treasury bills are short-term securities, right, that are issued by whom? They are issued by RBI, on behalf of Government of India, right? And what is the role? The role is basically to manage short-term funding requirements, no doubt regarding that, right? That is why they are short-term short-term securities that are for short maturities also, which is for 91 days, 182 days, 364 days, that is less than 1 year. So you would be knowing that. So based on that, C is going to be the correct answer to this question. Question number 20. Commercial papers are issued for which of the following purpose? They are issued by banks for managing liquidity requirement. They are issued by government for managing short-term requirement. They are issued by companies for short-term. They are issued by local government bodies, or none of the above. So what is going to be the correct answer to this question? Take your time and try to mark the answer. Okay, so if we talk about commercial papers, we know that commercial paper, they are short-term money market instruments, and they are issued by whom? They are issued by companies. They are issued by companies, or you can say corporates, right? And why is it so? Basically to raise short-term financial requirements. So that is the purpose of the commercial papers, and based on that, I would say C is going to be the correct answer to this question, by companies for short term. An easy one. Moving on to question number 21. Commercial papers can be issued for a minimum of how many days? It's 2, 7, 15, 14, or none of the above. So this is also an easy one, because the correct answer is going to be the B option, which is 7 days, right? So they are issued, they shall not be issued for less than 7 days, right? And that is going to be the correct answer, because that is the minimum period for issuing the commercial paper. So B is going to be the answer to this question. Now the next one. So over here we have a paragraph. I would like you to read this paragraph, and then you have to solve the question. So take your time, pause the video, read the paragraph which is related to commercial paper. I'm not going to read it for you, because I'm the one who has framed this question, so I already know it. So I just want you to read it, pause the video, and based on that try to solve the question. So commercial paper can be issued for a maximum duration of dash days. So how many days? What is the maximum duration? We have already seen the minimum, which is 7 days. And what is the maximum? The maximum is 1 year, which is going to be nothing but 365 days, right? So that is why B is going to be the correct answer to this question, because it is of 1 year. 1 year means 365 days. Now moving on to question number 23. In India, commercial papers are issued in denominations of rupees dash lakh or multiples. So how many lakhs? In denomination of what? In denomination of rupees 5 lakhs. Rupees 5 lakhs, right? It can also be issued in multiples of rupees 5 lakhs thereafter, right? But the minimum denomination is rupees 5 lakh. So E is going to be the correct answer to this question. Commercial papers are issued in India in which of the following forms? A. Participatory notes, B. Promissory notes, C. Debt bills, D. Equity bills, or E. None of the above. So what is going to be the answer? So the correct answer is going to be the B option, which is promissory note, because promissory note means that the issuer promises to pay the face value to the investor on maturity, right? And if you talk about commercial papers, we know that they are unsecured short-term instruments, right? And in India, basically they are issued in the form of promissory notes, and that is why B is going to be the correct answer to this question. Now moving on to question number 25. Which of the following system is be referred in the above paragraph? So try to read this paragraph and mark the answer. It says Dash is a screen-based electronic anonymous order matching system of secondary market trading in government securities owned and operated by RBI. Membership of the system is currently open to entities such as banks, primary dealers, insurance companies, and mutual funds, that is entities that maintain subsidiary general ledger accounts with the RBI. These entities are designated as primary members of the system and are permitted by the RBI to participate directly. अभी तक यार इतना भी पढ़ लिया तो आंसर मिल जाएगा क्वेश्चन का, ठीक है? And gilt account holders who maintain gilt accounts, respective primary members, with these primary members are allowed to indirect access to the system and may place trade by requesting their respective primary members to submit orders on behalf of the system, right? So mark your answers. Is it going to be NDSOM, ECS, CBS, RTGS, or CTS? So what is going to be the correct answer? Yes, so the correct answer is going to be the A1, which is NDSOM, right? Negotiated Dealing System Order Matching, right? Because the question is saying it is a screen-based electronic anonymous order matching system, right? Which basically makes sense if you talk about option A. And we know that it is owned and operated by RBI. This is again something mentioned over here, right? Owned and operated by the RBI. And apart from that, basically, all these features that are mentioned as a part of the paragraph, they align with option A, which is NDSOM, right? It cannot be ECS, right? It is because ECS is used for electronic fund transfer, right? It is electronic clearing system and it is used for electronic fund transfer and not the government security. So that cannot be the answer. Apart from that, CBS cannot be there because core banking solution, we know it is used for the operations of banks and not, it does not deal with government securities again. Then we have RTGS, which obviously cannot be the answer, and then we have centralized treasury system, which which basically requires check clearing and not the government securities, right? So that is why A is going to be the correct answer. Now next question, which of the following executes transaction of the NDSOM? So which of the following executes transaction on the NDSOM? RBI, CCIL, NPCI, CDSL or NSDL? Mark your answers for question number 26. Which of the following executes transaction on the NDSOM? Yes, everyone, mark your answers. So this execution of transaction, basically, if we talk about NDSOM, right, we know that it is an order matching platform for trading government securities, and the trades that happen in this platform, they can be conducted by different type of entities. For example, it can include banks, primary dealers, it can include insurance companies, right? And over here, if we talk about CCIL plays very important role in clearing and settlement of transactions that are executed as a part of NDSOM, right? So that is why CCIL is going to be the answer to this question, not the RBI. Don't think that it is RBI, although RBI plays important role is owning and regulating this platform, but the clearing and settlement system, it is handled by CCIL only. It is the one that plays important role in executing the transactions, right? So that is why B is going to be the correct answer to this question and not the CDSL or NSDL, because these are the depositories, they are not executing the transactions, right? They are just the depositories. So D और E तो हो नहीं सकते, और NPCI तो अलग ही चीज है, ठीक है? ये तो आप कंसिडर भी नहीं करोगे. So that is why B is going to be the correct answer to this question. Now the next one. So CCIL is used to clear what type of trades? Primary market transaction in shares, transaction in government securities, primary market transaction in IPOs, all of the above, or only ANC? So mark your answers. This is something that I just told you, because if I talk about CCIL, it basically provides clearing and settlement services with respect to transaction in government securities, right? So that is why B is going to be the correct answer to this question. So transaction in government securities, that's what CCIL do. Execution of this transaction is performed by CCIL. So question number 28 now. Under the LRS, liberalized remittance scheme, all resident individuals, including minors, are allowed to freely remit up to dash per financial year for any permissible current or capital account transaction or a combination of both. Now this question was asked in PYQs, right? It's an easy one, and B is going to be the correct answer. You would already be knowing it, which is USD 2,50,000. So that is going to be the correct answer. Now the next question from forex market. Rupee has been weakening off late and has breached level of 70. Under these circumstances, what action can be executed by RBI? So what RBI can do in this case? So if the rupee is depreciating, what the RBI is going to do? RBI can sell dollars in the market, right? And what it can do, it can absorb rupees, right? So that basically the value of rupee, it gets appreciated, right? And it can deal against the depreciation. So that is why A is going to be the correct answer to this question, which is selling of dollars, right? So I hope it is clear. Now moving on to next one. In the field of finance, which of the following is an example of alternative sources of finance? Overdraft credit, government securities, bond, bank loans, or forfeiting? So yes, the correct answer is going to be what? It is going to be the E option, which is forfeiting, right? Forfeiting is an alternative source method that is used in basically in case of international trade. And over here, what the exporter can do, exporter can sell his receivables to a forfeiter, and it is sold at a discount price, right? And in return, he is going to receive what? It is going to receive the immediate cash. So that happens, that is the crux about forfeiting, and E is going to be the correct answer to this question. Now question number 31. Neil wants Neil wants to earn a higher return on his saving, while Ria is looking for a personal loan at a lower interest rate than what was offered by traditional financial institutions. So they decide to use a peer-to-peer lending platform that directly connects borrowers and lenders. So which of the following statement regarding this arrangement is false, right? So it is asking about P2P platforms, and you have to identify the incorrect option, the false option. So Neil may earn a higher interest rate compared to traditional bank deposits. No problem regarding that. This statement is true. P2P lending platform is not regulated by RBI. No, this is purely incorrect, because we know that in order to get involved into P2P business, it is mandatory that you need to get a certification from RBI, right? And apart from that, your company should be incorporated here in India, and you have to get registered as a NBFC. So you cannot do that without getting regulated by RBI. So that is why B is going to be the incorrect option clearly, and that is what the question is asking, the false one. So B is going to be the answer to this question. Now question number 32. Ria is launching a startup and decides to raise fund by creating an online campaign where thousands of individuals contribute small amounts through a digital platform. This enables her to create capital without relying on conventional financial channels. Which of the following statements is being used? Which of the following financing method is being used? So you can say what she is doing. She is raising funds by online campaign where so many people, thousands of people are there who are contributing small amount. So this is clearly an example of crowdfunding, right? So C is going to be the correct answer, because this is what exactly happens under crowdfunding. Small number of people, they give small amounts, and that leads to creation of a big pool that can be used for a certain type of cause, right? So that is why C is going to be the correct answer to this question. Now moving on to question number 33. So this is regarding threats. So try to pause the video, read this paragraph, take 1 minute, and then try to mark your answers. So Threads, a digital platform that enables MSMEs to discount their invoices, is regulated and controlled by whom? So we know that it is regulated and controlled by whom? It is regulated and controlled by RBI. So C is going to be the correct answer to this question, right? So we know that Threads in an online discounting, e-discounting platform where the MSMEs, they can sell their invoices and in return they can get the finance, right? So, and it is regulated by whom? We know that it is regulated by RBI. Now the next one. With reference to Threads, consider the following statements. So Threads enables MSMEs to obtain liquidity by facilitating discounting of trade receivables arising from sales to corporate and government buyers through an electronic platform. This is true. Then platform addresses the issue of delayed payments to MSMEs by allowing multiple financiers to bid on invoices accepted by buyers, right? So this is also true, because what happens in this case is that, for example, these are the financiers that are there, and this is the entire Threads platform, right? So let us say there is an MSMEs who has a lot of invoices for which the payment is pending from different buyers, right? So what it can do, if it is looking for immediate cash, right, quick cash, so it can sell these invoices to these financiers as a part of the Threads platform, right? And in return, what can happen? In return, basically, the financiers, they can finance it, right? They can finance and they can provide immediate cash to this MSME. So this is what happens, and this is what has been written as a part of the statement also. Then the next thing is that The next thing is that TRED platform are recognized as market infrastructure institution. Now this is an incorrect option because TREDs are not recognized as market infrastructure institutions, right? Infrastructure institutions, they generally include entities like, for example, stock exchanges, for example, clearing corporations, for example, depository, right? Different sort of market infrastructure institutions are there. But when we talk about TREDs, right? TREDs is just an invoice discounting platform, right? It is not an MII. So this is going to be an incorrect option, and based on that, B is going to be the answer to this question. Now question number 35. Which of the following correctly describes the settlement mechanism under the TREDs? So based on the entire discussion, you can pause the video and mark the answer to this question. So as a part of TREDs, what happens? We know that I told you that settlement of funds on TREDs is carried through RBI regulated system and settlement systems. MSMEs receive payment only on the invoice due date and not at the time of discounting. This is just an opposite statement that has been written. This is not true at all, right? Because MSMEs over here, they receive payment at the time of discounting and not only at the time of invoice due date. So this is something that is not true. So you can eliminate this option. Financiers recover funds directly for MSMEs in case of buyer default. So this is again not true because over here the financiers that are there, they recover money from the buyer, right? Not directly from the MSMEs. So the buyers who were supposed to give the money to the MSMEs, now they will give the money to the financiers directly, right? MSMEs are not going to act as a medium in this case. So it is going to be directly recovered from the buyers only. So again, this is the incorrect one. Then settlement timelines from TREDs are decided by mutual agreement between the MSMEs and financiers. So this is again not true because it is not something that is strictly followed. Then TREDs platform operates outside the formal financial system to reduce regulatory burden. Now this is again not true because this operates within the formal financial system only, which is ultimately regulated by RBI. So again not true. So A is going to be the correct answer to this question. Now question number 36. Bank X has a foreign account with Bank Y. Bank X has a foreign account with Bank Y in Bank Y's home currency. So Bank X has a foreign account in Bank Y in Bank Y's home currency, right? So this is some foreign country for Bank X. So for Bank X, this account is called what? Vostro, Potro, Loro, Nostro, or none of the above. So the correct answer is going to be what? So if I talk about Nostro first of all, right? Nostro means what? Nostro basically means our account with you. So over here, of course, Nostro is going to be the answer because you can see the bank account. Bank X that is there, it is what it is doing. It is maintaining its account with Bank Y, right? And in Bank Y's home currency, right? In Bank Y's home currency. So it clearly says our account. मतलब हमारा account आपके पास, which means Bank X account with Bank Y, right? So our account with you. So that is the Nostro, right? On the other hand, if you see other options also, for example, if I talk about Vostro, Vostro means what? Vostro basically means your account with us. Your account with us. So for Bank X, the account that has been opened with Bank Y, this is the Nostro account. But if you see from the eyes of the Bank Y, right? So for the Bank Y, the same account will be called what? It is going to be Vostro. So on one side, for the Bank X, this account is a Nostro, which has been opened in other bank's account. So, but on the other hand, if you see from the side of the Bank Y's perspective, it is going to be Vostro because Vostro means your account with us. So it means Bank's X account with that is open with them in Bank's X's home in Bank's Y's home currency. So that is going to be the Vostro, right? But the question is asking about for X, this account is called what? So it is going to be the Nostro. Nostro is going to be the answer to this question, right? Now if you talk about Potro, there is no such term like Potro. This is written just to confuse you. We know about Loro already. You would be knowing about Loro. In case of Loro, Loro basically means their account with us, right? So it is used when one bank, right? They are basically maintaining, it is getting maintained by another bank, right? With a third bank, by the third bank. So third bank is also involved as a part of it. So that is known as a Loro account, but no such scenario has been mentioned as a part of the question. So C cannot be the answer to this question. So that is why the correct answer is going to be what? It is going to be the D option, right? I hope it is clear to you. Now question number 37. Which of the following types of banks act as Government of India agent for financial inclusion in rural areas? Now this is an easy question because we know that among all the options, the first one is banking correspondents, then the private banks, right? Then the public sector banks, then the regional rural banks, and then we have the CRR. So based on that, basically, the correct answer is going to be the D option, which is regional rural bank, right? They are specifically created by the government in order to serve rural and semi-rural areas, right? And what is the main objective? The main objective is to promote financial inclusion, to promote rural credit. Also sort of things are the priorities of the region rural banks, right? And the question is asking specifically about rural areas. Don't think that it is going to public sector banks. The public sector banks domain is much broader, right? The question is very narrow. It is asking about rural areas and the agent for financial inclusion for the government, which means it has been established by the government, so it cannot be private banks, right? So that is why D is going to be the correct answer to this question. Now moving on to question number 38. In the world of finance, it has been seen that in hypothecation. So what happens in case of hypothecation? So option A, only possession of asset is transferred. Option B, ownership is transferred. Option C, both possession and ownership are transferred. Option D, neither possession and ownership is transferred. Option E, none of the above. So if you see all the options, the correct answer is going to be what? Because we know when we talk about hypothecation, borrower, the borrower that is there. So one is the lender and the second is the borrower, right? So borrower is going to offer an asset, and this asset is going to be it is going to act as a security, right, against the loan that is being taken from the lender, right? So, but the point is that when we talk about hypothecation, and if you talk about the ownership of the security remains with the borrower only, right? If you talk about the possession of the security, possession also remains with the borrower. So neither the ownership is transferred nor the possession is transferred, right? So what the lender is getting? Lender is only getting the charge. He only get the charge or right over the asset, right? If the borrower defaults, then the lender can take over that asset in order to recover the cost of the loan. But the ownership and the possession during the span is going to be with the borrower only, right? So neither the ownership nor the possession is transferred. So that is why D is going to be the correct answer to this question. Now question number 39. ABC Limited approaches a bank for different banking facilities to support its business operations. The bank offers the following services. So let us see what services are provided. So option A, Neil opens a recurring deposit account to save regularly. Ria avails a cash credit facility to finance her working capital needs. Arjun obtains a fixed credit from the bank for purchasing machinery. And Karan requests the bank to issue a letter of credit to facilitate the import of raw materials. Now, which of the above facilities is not a fund-based transaction? This is an easy question. A similar type of question was asked in case of PYQs also, as a part of PYQs. If you have gone through the PYQs, fund and non-fund based transaction, right? So if you talk about fund-based transaction, right? Fund-based transaction basically means where there is actual involvement of cash. Actual involvement of cash happens in case of fund-based transaction. Now, if you see all the options over here, if you talk about Neil, right? Neil, what the Neil is doing? Neil is opening a recurring deposit account, right? Which basically involves funds, the cash directly, right? So that is going to be a fund-based transaction. The question is asking about non-fund-based transaction. Ria avails cash credit facility. ये तो नाम से पता चल रहा है fund-based transaction है. Arjun obtains a fixed credit from the bank for purchasing machinery. It is a fund-based transaction. Now Karan requests the banks to issue a letter of credit to facilitate the import of raw material. Now, is it a fund-based transaction? The answer is no. Cash is not directly involved, right? Actual cash flow is directly not getting involved in this case. No doubt there can be involvement of cash flow, but it will happen only and only if the customer fails to pay, right? And the bank at that point of time, bank will have to honor the commitment, and then only the cash flow will be there. But if it see in traditional terms, right, naturally the involvement of cash flow does not happen in this case. Naturally, what is happening? The bank is just providing the guarantee in case of letter of credit, right? In case of letter of credit. So in case of letter of credit, what the bank is doing? Bank is not immediately giving the money to the customer. The bank is just providing the payment guarantee to the customer, and only if the customer defaults, then only the involvement of cash is going to happen, right? But if you talk about the immediate settlement, no cash is involved as a part of it. So that is why this D option is going to be a non-fund based transaction, and that is why you can see current letter of credit. That is going to be the answer to this question. Now question number 40. Identify the type of bank that is described in the passage. So take your time, read the paragraph and mark your answers for the question number 40. Yes. So in 2014, the RBI introduced a new category of bank especially designed to address the need of financial needs of underserved sections of the society. These institutions were established to improve access to financial services in rural and semi-urban areas where traditional banking infrastructure is limited, and they are focused on providing support to small and marginalized sections, including micro and small enterprises, unorganized sector, and lower income households who often struggle to access formal banking channels. These banks are required to provide credit and saving options tailored to the need of individuals and small businesses with limited resources. The primary goal of these institutions is to bridge the gap in financial access for communities that are typically excluded from the mainstream banking services. अभी तक आपको ये तो पता चल चुका होगा कि since they are providing the loans, right, they are providing the credit options, so it cannot be the payment bank, right? Now these banks were established in 2014, right? It means not very long ago, right? So again, it cannot be, I would say, these cooperative banks, because cooperative banks बहुत पुराने banks हैं, right? वो भी नहीं होंगे इसमें. Again, it can be between RRB, it can be between RRB and small finance bank, but it is not going to be RRB, because if we talk about RRB basically focus upon rural credit, right? And it is not going to be the option in this case. It is not going to be the answer in this case. The option B is going to be microfinance credit, but microfinance, they are not specifically RBI regulated banking category, because most of the although microfinance banks, they are also regulated by RBI, but if you see the statements over here, it is more biased towards the small finance banks, right? Because small finance banks are the type of banks that were precisely introduced in the year 2014. The objective was basically to provide money or the credit to the underserved sections of the society, right? And they basically focus upon rural and semi-urban areas, right? So if you try to look into all these keywords that are mentioned as a part of it, right, you can clearly see that the correct answer is going to be what? It is going to be small finance bank. So D is going to be the correct answer to this question, right? So I hope it is clear to you. It cannot be cooperative banks again, because cooperative banks are member-owned institutions and no such type of information is provided as a part of it, as a part of the paragraph. So I hope there is no such confusion over here, right? So RRB क्यों नहीं होगा? Because RRB 2014 में नहीं बने थे. RRB बहुत पुराने मतलब उससे पुराने हैं. They were formed under RRB Act, right? So they were not established in 2014. So RRB is not going to be the option. I hope no confusion is there, right? Okay, fine. All right. So let us move on to next question. Now the next question is, what is the primary aim of the banks that are described in the passage? So as of now, we know that this passage is talking about small finance banks. So it is saying that what is the primary aim of the bank that is being described in the passage? So maximizing profit, so this is not the primary aim. Expanding international operations, this is not the primary aim. Serving the needs of underserved population, now this is precisely written as a part of the passage, right? And this is something that we know is the goal of small finance banks, right? So C is going to be the correct answer to this question. Now the next one, the banks mentioned in the passage primarily cater to which groups? Large corporations, high net worth individuals, small enterprise and low income households, government agencies or small investors. Now we know that if we talk about small finance banks, they primarily deal with small enterprises and low income households only, right? This is the goal, and this has been written in the passage. But even if information was not there, if you have read about small finance banks, C is the more suitable option. So C is going to be the correct answer to this question. Now, in addition to providing financial services, these banks also contribute by reducing reliance on foreign investments, promoting financial literacy among underserved communities, offering competitive interest rates to large corporations, increasing automation in urban areas, and supporting only high yield investments. Right? So we know that if you talk about small finance banks, apart from providing financial services, they also promote financial literacy. Right? They also promote financial literacy. So B is going to be the correct answer to this question. Rest of the rules are not the primary priorities of the small finance bank, but this B option is one of those important objectives that are there as a part of small bank financial institutions. Now, which of the following statements are correct with respect to above paragraph? Now take your time, pause the video, read this paragraph and mark your answer. So the government of India initiated a comprehensive reform process in the financial system during 1992 to 93. Following the recommendations of the Committee on the Financial System, as a part of the second phase of reforms, another committee was constituted under the chairman of M. Narasimhan. The committee focused on strengthening the banking system through improved regulation, competition and efficiency. Its term of reference clearly indicated an emphasis on the banking sector reforms, including prudential norms and market-oriented monetary tools. The committee recommended greater participation of private and foreign banks to enhance competition. It also emphasized shifting from direct controls to indirect instruments of monetary policy for liquidity. Several structural and operational reforms of the banking system were guided by this recommendation. Right? Now, which of the following statements are correct with reference to the above paragraph? So the committee referred to in the paragraph is the Committee on Banking Reforms. So this is correct, right? Statement 1 is correct. This is what written. Committee on Banking Reforms, right? Which is nothing but the Narasimhan Committee 2 that was formed, right? Committee on the Banking Sector Reforms. Statement number 2. The committee recommended licensing of new private banks, including domestic and foreign banks. Now this is also true because the aim behind this recommendation was to increase the competition, right? To increase the competition and efficiency and market discipline in the banking sector, right? So that is why private banks were also encouraged to be given the license as a part of the banking sector. Now the committee recommended continued resilience on CRR as the primary tool for liquidity management. No, this is not true. This is not true at all. Why is it so? Because if you talk about the Narasimhan Committee, if you have read about Narasimhan Committee did not recommend continued resilience on CRR, right, as the primary liquidity management tool. Why is it so? Because if you see the intent behind Narasimhan Committee, it emphasized more upon shifting from direct control to indirect monetary policy instruments, right? You know about direct instruments and the indirect instruments that are there as a part of the monetary policy. So it basically emphasized that we need to move away from direct control to indirect control when it comes to the monetary policy instruments, when it comes to the liquidity management as a part of the money supply. So CRR is a type of direct monetary policy instrument that is there, right? But Narasimhan Committee said that we need to move away from direct control to indirect control, right, when it comes to liquidity management. So this cannot be the correct option based upon the mindset with which the recommendations were given as a part of the Narasimhan Committee. So that is why B is going to be the correct answer to this question, right? Later on you can read the explanation also, right, as a part of it, just for the sake of revision. So it emphasized shifting from direct control to indirect monetary policy instruments for liquidity management. Indirect मतलब क्या हुआ, जैसे moral suasion हो गया. It's a kind of indirect monetary policy instrument. So that is what was emphasized by this Narasimhan Committee. Now the next question number 45. Dash was introduced on the recommendation of Narasimhan Committee to manage liquidity through indirect monetary policy instruments. CRR, SLR, LAF, MSS or bank rate. So what is going to be the correct answer to this question? Yes, everybody please mark your answers. So the correct answer is going to be the C option, which means liquidity adjustment facility. This was something that was recommended to manage the liquidity through indirect monetary policy instruments, which can include the repo rate and the reverse repo rate that were introduced as a part of it, right? That can be used to inject liquidity and to absorb liquidity, right? So these were the things that were introduced. So C is going to be the correct answer to this question. Now question number 47. Udyami Mitra portal launched by SIDBI is for what? Large scale industries, small and medium industries, rural industry, automotive industry, or none of the above. Yes, please mark your answers. Okay, so Udyami portal launched by SIDBI is for what? It is for small and medium enterprises. So it basically helps the entrepreneur to basically apply for loans in a digital format, right? And it connects with banks and different types of financial institutions. So B is going to be the correct answer to this question. So question number 48. Which of the following statements are true? SEBI is the regulator of commodity markets. So this was asked as a part of PYQs. RBI is the regulator of NBFCs. SEBI is the regulator of capital market. Which of the following statements are true? Only one, 1 and 3, 1, 2 and 3, 2 and 3, or none of the above. So yes, we know that SEBI is the regulator for commodity market, RBI is for NBFC, and SEBI is for capital market. So C is going to be the correct answer to this question, right? So C is going to be the correct answer. Now question number 49th. Which of the following institution is the regulator of capital market? So again, an easy one for question number 49th. So yes, we know that it is going to be SEBI. It was again asked as a part of previous year questions. Now question number 50. In case of public issue of an InvIT, Infrastructure Investment Trust, dash of the units are reserved for QIBs and dash for retail investors. A 6515, B 7020, C 7510, D 80 and 5, and E 60 and 25% respectively. So what do you think is going to be the answer to this question? So it is asking about QIBs and retail investors. So we know that for QIBs it is what? It is 75%. And for the retail investors it is 10%, right? It is 10%. So that is why C is going to be the correct answer to this question. I hope you were able to mark it correctly. So C is going to be the correct answer. Now question number 51. National Bank for Financing Infrastructure and Development Bill 2021 was introduced in Lok Sabha on March 22, 2021. The bill seeks to establish the NAFID as the principal financial institution for that sector. So this is a very easy question. NAFID is for what? It is for the infrastructure sector. We all know that, right? We all know that about NAFID. So it was established with respect to the infrastructure sector and in order to provide the finance, right? So and that is why B is going to be the correct answer to this question. I hope it is clear to everyone. So moving on to question number 52. Which of the following organizations is being referred to in the above paragraph? So the paragraph says to address the need for long-term capital provided with a comprehensive cross-sectional mandate, unlike the niche-focused mandate on the development financial institution, the dash was established as an infrastructure-focused DFI, development financial institution. अब आप इतना भी पढ़ोगे तो you can easily know that basically the question is been talking about NAFID because that is a rule, that is infrastructure-focused development financial institution, right? You can see its objective is to lend or invest directly or indirectly in infrastructure projects and to catalyze the investment for the private sector institutional investors. So again, a very easy question, and C is going to be the correct answer to it. If you want to read more about NAFID, you can read it through here, that it was established as an infrastructure focused development financial institution, and it was given the status of AIFI in March 2022. And what is the objective? The objective is to provide long-term finance for infrastructure projects, and it also aims to catalyze private sector institutional investment. So that is going to be the answer. Now, the next question related to the same passage. So the organization referred to in the above paragraph is regulated by which of the following? So we know that this passage is talking about NAFID, right? So NAFID is regulated by which of the following authorities? So since it is a type of bank who has also been given the it's a developmental bank, right, DFI, which has also been given the status of AIFI, All India Financial Institution. So ultimately it is going to be regulated by the RBI, no doubt regarding that, right? So C is going to be the correct answer to this question. Next one. Which of the following does not come under financial services or financial inclusion? Option A, saving account. Option B, subsidies, microcredit, insurance, or financial advice. Yes, please mark your answers. I can see the chat box. Yes. So for question number 54, B is going to be the answer to this question, because when we talk about financial inclusion basically means providing access to different type of financial services to the underbanked and marginalized section of the society, right? So as a part of the financial inclusion, we can provide the saving account, which is a basic banking services. It can include microcredits, it can include insurance, it can include the financial advice also, right? As a part of which we can provide guidance for better financial decisions. But subsidies are not a part of financial inclusion, right? Why subsidies are not a part of financial inclusion? Because when we talk about subsidies are basically the government support or government benefits, right? And although it may be transferred through the bank accounts can act as a delivery channel when it comes to the subsidies, but subsidy itself is not an objective of financial inclusion, right? It is, I would say, on the other hand, this subsidy is a kind of burden on the government. It is a kind of burden of the government. And why the government is taking the burden of itself? Because it wants to reduce the burden on the people, right? For example, LPG subsidies, fertilizer subsidy, also sort of things. So the bank may act as a delivery channel for subsidy transfer, usually through DBT and a bank account, but the subsidy itself is not a banking or a financial services, right? It is not a type of service. It is a type of, I would say, a kind of a welfare facility that is being provided by the government in order to promote welfareism in the society. So that is why B is going to be the answer to this question. It is not a financial service under the financial inclusion. Now the next one. Which of the following types of banks act as a government of India agent for financial inclusion in rural area? So this is something, I think this question was repeated. Apologies from my end. But the correct answer to this question, we know it is going to be regional rural bank, right? D is going to be the correct answer to this question. It acts as a government of India agent, right? Because they are established by the government, and the goal is to promote financial inclusion specifically in rural areas. So D is going to be the correct answer to this question, right? Now moving on to the next one. The next one is question number 56. Which of the following act as the agent of micro financial institutions? So insurance companies, NBFCs, self-help groups, RRBs, or none of the above? So mark your answer for question number 56. So insurance companies, if we see, they provide the insurance services but not the microfinance support, right? If you talk about NBFCs themselves, they work as microfinance institutions, but they are not called as agent of microfinancial institutions, right? They can act as one. They can act as MFIs. They because we know that there is a certain type of NBFC which is NBFC MFI, right? Which basically provide the microfinance lending to the different type of entities, but they are not acting as agent of MFIs, even though they are themselves, they are acting as MFIs, but they are not the agent of the same, right? The next is RRB. ये तो बैंक है, ठीक है, ये they are the type of RRBs, they are the type of banks that basically act as an agent for the government for the rural areas, but not the agent of microfinance institutions. So the correct answer is going to be self-help group, right? Because self-help group, they basically play very important role by acting as an agent for microfinancial institution, because when we talk about microfinancial institutions, they have to connect with whom? They have to connect with those people who come from the marginalized section of the society, right? So what these SHGs do, these SHGs, they contact with these people who come from such backgrounds, and they help them to obtain the funding from the microfinancial institutions, right? So it can include the NGOs also as a part of it, right? So they can basically help in order to provide them in order to collect small saving from the members, right? They can also help to access the small loans from the microfinance institutions, right, to these sections of the society. So that is why basically they are supporting the credit delivery at the grassroots level, and they are acting as the agent of microfinancial institutions, right? So that is something, is the rationale behind it, and C is going to be the correct answer to this question. Now question number 57. Read the above passage and identify the X scheme launched by the government on 15th of August 2014. तो यार ये सुना होगा आपने 15 अगस्त को कौन सी स्कीम लॉन्च हुई थी 2014 में, राइट? एंड इफ यू सी द स्टेटमेंट, वेरी इजी. In the same regard, one such X scheme was launched to promote financial inclusion on 15th August, which is one of the biggest financial inclusion initiative in the world. बस इतना पढ़ के भी आपको पता लग गया होगा that the question is talking about प्रधानमंत्री जनधन योजना, right? PMJDY, which is one of the largest or the biggest financial inclusion initiative in the world, has played a very important role in opening the bank accounts in our country, right? So B is going to be the correct answer to this question. Now the next question based upon this passage only. You can just pause the video, you can read the passage, and based on that, let us see the question. So what is the insurance limit that is provided under Pradhan Mantri Jeevan Jyoti Bima Yojana? What is the insurance limit that is provided? So Pradhan Mantri Jeevan Jyoti Bima Yojana, which is for the life insurance, right? It is a life insurance scheme that provides life insurance coverage of what? Of rupees 2 lakh. If there is any case of death of the insured person, in that case 2 lakh amount is going to be provided, and that is why C is going to be the correct answer to this question. With regards to the above mentioned passage, what is the age limit to Pradhan Mantri Jeevan Jyoti Bima Yojana? So it is talking about the age limit. So if you know about age limit, the correct answer is going to be 50 years, because that is the age limit in this case. Next one, with regards to the above mentioned passage, what is the maximum pension received under Pradhan Mantri Atal Pension Yojana? We know that this scheme is there for what? It is for the unorganized sector, right? It is for the unorganized sector, and the subscriber, they receive a guaranteed monthly pension after the age of 60 years, right? And the pension amount can be 1,000, 2,000, 3,000, 4,000, depending upon the contribution that you are making. And the question is asking that what is the maximum pension that you can receive? So the maximum pension is going to be 5,000 in this case. So starting of 1,000 to till rupees 5,000, that is the maximum that you can receive, and A is going to be the correct answer to this question, right? So moving on to the question number 62. The government of India launches a DBT scheme to ensure that subsidies are transferred directly into the beneficiary's bank account, with the beneficiaries being identified using a unique identity number and receiving transaction alerts on their mobile phones. This initiative is based on which of the following combinations? So it is asking about JAM, basically JAM Trinity. You must have heard about it. So JAM includes what? Jandan Aadhaar Mobile, Jandan Agriculture Microfinance, Jan Suraksha Aadhaar Mobile. Then Jan Suraksha, Jandan Aadhaar Money and Jan Suraksha Agriculture Mobile. So we know that the correct answer is of course the A1, which is Jandan Aadhaar Mobile, where Jandan basically means the bank accounts are used to receive the subsidies directly. Aadhaar basically means the Aadhaar card because it is used to identify the beneficiaries, right? And thirdly, we have the mobile, through which the beneficiaries they can receive the alerts on their mobile phones, right? Or any kind of, if any kind of updates are there, right? So that is the best part about it, and the subsidies are directly transferred to the bank account of the beneficiaries as a part of the DBT. So A is going to be the correct answer to this question. Question number 63. Consider the following statements about UPI. UPI is regulated by NPCI. This is true. UPI is regulated by UIDAI. No, this is not true, right? UIDAI manages the Aadhaar related functions and not the UPI. So this is not true. You can easily eliminate these options. Then one need bank details of the receiver of the payment while transferring the amount as a part of the UPI. Now this is not true. I would say this is not something that is always true, because you do not mandatorily need the bank account details of the receiver. You can just have the virtual address of the person to whom you want to make the payment, right? And that should also be enough. Or you can send through mobile phone number also, or you can send it through QR mode also, right? Through by scanning the QR code. So that is something that is not true. Then one need virtual details of the receiver while transferring the amount. So this is correct, right? This is correct. And that is why I would say B is going to be the correct answer to this question. Question number 64. UPI is monitored by which of the following institutions? So this is something that we have seen in the previous question itself, which means A option, right? NPCI. So A is going to be the correct answer to this question. Now name the organization formed in 2008 responsible for creating a robust payment and settlement infrastructure in the country. So NPCI, CCIL, Paytm, BBPS, which means Bharat Bill Payment System, and none of the above. So we know that this organization that was formed for creating a robust payment and settlement system, settlement infrastructure in the company, it was in the country, it was basically NPCI, right? NPCI is the organization that was formed, and we know that basically this organization has played very important role, and it has given us a lot of innovative platforms including UPI, IMPS, Aadhaar enabled payment system, NACH. You must have heard about NACH, right? It has also enabled, I would say, RuPay, which is also a product of NPCI. So different sort of innovative platforms have been brought by this NPCI, right? A very reliable body, a reliable entity, right? And A is going to be the answer to this question. Question number 66. The paragraph is talking about Dash and the Dash account, Dash system and the Dash account. So if you see the blanks over here, so Dash has developed the Dash program to meet the electronic tolling requirements of the Indian market. Now if you just see the options over here, पहली लाइन ही पढ़ो अगर आप, it offers an interoperable nationwide toll payment solution. तो सामने से पता चल रहा है that basically it is talking about NETC, National Electronic Toll Collection System, that is there, right? Because NETC is the interoperable, right? Interoperable toll collection system, right? That is there. Toll payment solution, that is there, as it applies to Dash system and encompasses a system of processes, business rules and technical specifications which enable the customer to use their Dash account as a payment mode of any toll plaza, irrespective of who has acquired the plaza, right? So in this case, the question is asking, the paragraph is talking about Dash system and Dash account. So which system is been talking about? It is talking about National Electronic Toll Collection System, which is NETC. And which account? It is talking about the FASTag account, right? It is talking about the FASTag account over here and NETC over here, right? So that is going to be the answer to this question. It is not going to be NFS, because NFS is related to, I would say, ATMs and not the toll payment. It cannot be NHAI, right? Because NHAI is related to highways. but the system that is being mentioned in the question, it is related to toll payment specifically, so it is going to be any TC. It is the most appropriate option that is there, right? Then yeah, right. So in this case, B is going to be the answer to this question, right? B is going to be the correct answer. Now another question from this paragraph, which is saying who introduced any TCA system to meet the electronic tolling requirements of Indian market? Is it RBI, NPCI, SEBI, SBI, or SIDBI? Right? So the correct answer is going to be NPCI, right? It is a product of NPCI only. So B is going to be the correct answer to this question. Now it's question number 68, which is about NBFCs. So an NBFC is identified under section, an NBFC is defined under section 45 1F of the RBI Act 1934. This is true. This is true, no doubt regarding that. NBFCs are established under section 4A of NBFC Act 2002. NBFCs do not form part of payment and settlement system. This is and cannot issue checks drawn on it themselves. So this is again true, right? Because they are not part of payment and settlement system. For example, RTGS, right? NEFT. They are not a part of it. So C is going to be the correct option. First one is also correct, but second statement that says that they are established under section 4A of NBFC Act 2002. This is not true at all. Right, there is no such standard provision of section 4A of NBFC Act 2002. Basically, NBFCs, they are regulatory mainly under RBI Act 1934, right, under the Reserve Bank of India, right? So that is why 1 and 3, which means D is going to be the correct answer to this question, right? Now question number 69. What is the maximum subscription amount under which investors are required to use a designated fund blocking method? So the fund blocking method that has been discussed as a part of the paragraph, pause the video and try to read this paragraph. And it says that in recent effort to streamline transactions and enhance investor security, the SEBI has introduced new measures for public issues of debt securities. These measures requires individual investors seeking to apply through intermediaries to use specific method to block funds, especially for smaller subscription amounts, right? Investors will need to provide an account linked payment ID associated with the bank in their bid cum application forms. By doing so, SEBI aims to reduce dependency on traditional banking routes and encourage the adoption of faster digital adoptions for managing subscription. Now, if you do not know, let me tell you that this paragraph is talking about UPI based fund blocking mechanism, which works very similar to ASBA. You know about ASBA, right? So it works in a very similar fashion, just like ASBA only, right? So it is talking about UPI based fund blocking system, and the question is saying what is the maximum subscription amount under which investors are required to use the designated fund blocking method. So what is the maximum subscription amount that is there in this case? So in this case, the option is 5 lakh. Right, 5 lakh is the answer. Usually it is 1 lakh in case of UPI, but when it comes to subscribing the shares, if you want to subscribe the shares over there, the limit is higher, which is of rupees 5 lakh through the UPI. So what is going to happen? The amount is going to get blocked in your account that is linked to your UPI ID, right? And that's how basically if you get the subscribed shares, then the amount is going to be released. Otherwise, it will be unblocked as soon as you are not able to avail that certain number of securities or shares for which you want to subscribe, right? So that is something that happens in case of UPI based fund blocking system, and the maximum subscription amount which investors are required to use is basically rupees 5 lakh, right? Rupees 5 lakh, which is the answer to this question. And do not get confused between the UPI based blocking method and the ASBA, right? Although both are very similar, right? Operationally, they sound very similar, but the only difference is that, let me just tell you that in case of this one UPI based fund blocking system, you are going to use a UPI ID, right? Investor is going to use his UPI ID, and then you know that auto pay mandate is going to come to a UPI account, and you will have to approve that auto pay mandate, and once you approve it, the money is going to get blocked in the bank account. This is the same bank account which is linked to a UPI ID, right? And if the money is debited, right, then the money, then the securities are going to be allotted to you. Otherwise, what is going to happen, the amount is going to get unblocked, right? If no allotment is made, then the amount is going to get unblocked and the money is released back right to the source. So that is something that happens in case of UPI based fund blocking method, and the maximum subscription amount is rupees 5 lakh. Now the next one, which organization has introduced these updated guidelines for debt security subscriptions? Right, so it is talking about the same paragraph over here. So it is talking about UPI based fund blocking system. So it is by SEBI, right? You need to know that it is by SEBI regarding the debt security subscriptions. Now the next one, question number 72. How many secondary users can be delegated access in a UPI circle? Right, so you must be knowing about UPI circles, right? So over here, the primary user that is there, it can delegate access to maximum of 5 secondary users. So D is going to be the correct answer in this case. D is going to be the correct answer to this question, right? Now the question number 73. Recently, RBI has released second dash with the theme cross-border payments under the dash for live testing of new products or financial services in a controlled or regulatory environment. So which of the options is correct as far as the fill in the blanks are concerned? So option A, cohort, regulatory sandbox. Option B, seminar, regulatory sand dunes. Option C, coverage, reserve box. Option D, statement or reserve platform. So the answer is going to be regulatory sandbox over here and cohort over here, right? So you must be knowing about regulatory sandbox, where different developers or financial institutions, they come and they're going to test new financial products, right? And the RBI is going to support. RBI supports these type of innovative initiatives. RBI has its own regulatory sandbox. Similarly, SEBI has its own regulatory sandbox. Different regulatory bodies have it. But in this case, the question is about RBI. So A is going to be the correct answer to this question, right? And the second cohort was cross-border payment. You must be knowing about it regarding the regulatory sandbox. So A is going to be the correct answer to this question. Question number 74. Which of the following body was created as per PJ Naik recommendations? Is it IBBI, IBC, Payment System, Bank Board Bureau, or only ANC? So if we talk about IBBI, IBBI was created through Insolvency and Bankruptcy Code in 2016 and not by PJ Naik committee recommendation. It is not related to PJ Naik committee recommendations at all. If I talk about IBC, right, it is again a law that is related to Insolvency and Bankruptcy Code, not directly related to PJ Naik committee. The third one is payment banks. Payment banks, if you know, they were basically recommended as per the recommendations that were given by Nachiket Moore committee, not the PJ Naik, right? PJ Naik committee gave the recommendations basically related to corporate governance with respect to banks, and they recommended the formation of Bank Board Bureau. Now let me tell you that Bank Board Bureau was formed by the government, right? But it could not, because of the legal challenges, it could not survive, right? And what the government basically did, government basically formed a new body, right, in order to replace this Bank Board Bureau. And what is the name of this new body? First of all, before knowing the name of the new body, you need to know about Bank Board Bureau. So Bank Board Bureau was basically formed in order to appoint the top management individuals as a part of the bank, right? In order to appoint or in order to recommend the head of the public sector banks and the financial institutions, right? That was the job of the Bank Board Bureau, so that the public sector banks, they can appoint these individuals with full transparency and integrity. That is why it was formed, right? So that these heads can be appointed. But as I told you, because of legal challenges, it could not survive. And in order to replace the Bank Board Bureau, what the government basically did, government formed something called FSIB, which is known as Financial Services and Institutions Bureau. And now the point is that this FSIB that is there, it recommends persons for the appointment of full-time directors or maybe non-executive chairmen as a part of the company, right? When I say company, I mean to say the banking company that is there. So that is a job of FSIB presently. That is the status. But if you originally talk about PJ Naik committee, right? PJ Naik committee recommended the bank board bureau only. That is the other case that it could not continue because of the legal challenges that it faced, right? And in order to replace it, the government formed this FSIB, which is Financial Services Institutions Bureau, and it performed the similar role, which is the appointment of full-time directors and non-executive chairmen in the financial services institutions. So that is the goal, and I hope it is clear to you. Now, question number 75. Sorry, 77. Which part of the banking is being addressed by RBI in the above mentioned passage? So you need to know, you need to just read it. You need to identify the part of the banking that is being addressed by the RBI. So as per the discussions on governance in commercial banks in India, a discussion paper on governance in commercial bank in India was issued by the Reserve Bank on June 11, 2021 to review the framework for governance in the commercial banks. In order to address a few operative aspects received through such feedback, it has been decided to issue instructions with regard to the chair and meetings of the board, composition of certain committees of the age, tenure and remuneration of directors, and appointment of the whole-time directors. Under the revised guidelines for appointment of director and constitution of committees of the board, the chair of the board shall be an independent director. Now, if you see the entire scenario over here, you can clearly see that this independence, this integrity, also sort of things we know they fall under the purview of corporate governance, right? So the corporate governance is something that is being addressed over here through these kind of initiatives like quorum, the independent directors, the board composition, the formation of committees, age, tenure, all the sort of things are being considered. So it is nothing but related to this corporate governance only, right? So B is going to be the correct answer to this question. Next, it is asking about the risk. So question number 78. Systematic risk can be measured with the help of coefficient which measure the stock relative volatility with respect to whole stock market. What is this coefficient called? Vega, gamma, alpha, delta or beta? So mark your answers. Now see, if we talk about systematic risk is also known as market risk, right? And it affects the overall market that is there, right, as a part of the economy. And the worst part about systematic risk is that you cannot eliminate systematic risk through diversification because the entire market is suffering. So where else you are going to invest in order to reduce your risk? You cannot do so. So diversification does not work in case of systematic risk. That is the first thing. Apart from that, what is the coefficient, right, that can be used which measures the stock relative volatility with respect to the whole market, which basically means that, for example, if you have invested in certain type of stocks, let us say Tata, right, Tata Motors, or let us say Reliance, or let us say some other stock, L&T, right, whatever it is. And on the other hand, here we have entire stock market index that is there. Now the question is asking which of the following coefficient is used in order to measure the stock relative volatility with respect to the whole stock market, which basically means that if the stock market is performing well, then up to that extent, what about your investments that you have done in the stock market, how well they are performing? If the stock market is going up, then up to what extent the Tata Motor is going up? There could also be a probability that the stock market is going up and the Tata Motor is going down. That can also happen, right? The certain type of shares, they cannot perform well, or they are not aligning their performance with the overall stock market performance, right? It can also be the scenario that the stock market is moving with 1x and the Reliance is moving with 2x, right? It is basically outperforming the stock market performance, right? So that could happen. So this entire measurement, that how the different stocks are moving in context to the performance of the stock market, this entire performance is measured with the help of what? It is measured by beta. So beta coefficient is there, right? So beta is that coefficient that basically measures the relative stock market compared to, so relative stock market means the investments that you have done as compared to the entire stock market, right? The whole stock market that is there. So for example, if the stock moves up, if the market is moving up, then what is the performance of stock? Is it moving up? Is it moving down? Is it stagnant, it is not moving at all, right? So these are the things that are measured, their volatilities are measured with the help of beta, that how the individual stocks are performing, different stocks are performing in context to the overall stock market, right? So that is why E is going to be the answer to this question, because this is something that is used in order to measure it, right? And please remember, beta is used for systematic risk, very importantly, not for other type of risks, right? Systematic risk is something that that can be measured with the help of beta, right? So that is important, that you need to know that. So beta can have different type of values. For example, it can be equal to 1. Equal to 1 basically means the stock market and the stock, it is moving with same intensity, right, in the same direction. It can be more than 1 also, which means that stock is more volatile than the overall market. It can be less than 1 also, which means the overall market is more volatile as compared to the stock, or you on the other, in the other words, you can say that the stock is less volatile as compared to the other market, right? It can be negative also, which means less than 0, which means that stock market is moving opposite as stock is moving opposite as compared to the overall market. So that these can be different values of beta. I hope it is clear to you, right, that what do you mean by beta and what is the significance in context to especially the systematic risk, right? So now let us move forward. Now the next question, question number 79, it says, if the risk weighted assets of the bank are 560 million, what should be the capital employed by the bank as per the Basel and RBI norms in millions? So it is asking about two things. Firstly, it is asking about Basel, right? And secondly, it is asking about RBI, the mandate that has been set by RBI, and what has been provided to us. The thing that is provided is 560 million, which is nothing but the risk weighted asset, right? Now if you see over here, now, if the risk-weighted asset is 560 million, we know that as per Basel, what is the minimum capital requirement, right? Because it is asking about the capital employed by the bank. What should be the capital employed by the bank? So minimum capital requirement as per Basel is what? It is 8% of risk-weighted asset. So it means 8% of what? 8% of what? You can write it like this. 8% can be written at 8 by 100 into what is this weighted asset? It is 560 million, right? You can write it as 560. If you calculate it, it is going to be 0.8 into 56, 43 or something, right? 43 or something is going to be the, if you see the options, it is going to be 40 something, right? So 44.8, so we can eliminate these two. So 44.8 ही आ रहा होगा, ठीक है, if you calculate it. And if you calculate it as per RBI, तो RBI के हिसाब से क्या है? We know that minimum capital requirement as per RBI is 9%. So 9% of RWA. So 9% means 9 by 100 into 560, right? If you calculate it, it is going to be somewhat 54, right? 50, yeah, 50.4. So 44.8, 50.4, and B is going to be the correct answer to this question, right? Very easy to calculate. Don't go just because the numbers are written, don't think that you have to do something complex. Simple as that. You know that it is 8% of RWA, and here it is 9% of RWA. So 44.8 and 50.4, these are going to be the answers based upon the Basel and RBI, right? So B is going to be the correct answer to this question. आगे चलते हैं. Which of the following are 3 pillars of Basel 2? तो ये भी इजी क्वेश्चन है. 3 पिलर्स कौन से हैं? कैपिटल रिक्वायरमेंट, सुपरवाइजरी रिव्यू, ऑपरेशनल लिक्विडिटी और मार्केट डिसिप्लिन. सो वी नो दैट इट इज गोइंग टू बी कैपिटल रिक्वायरमेंट है, सुपरवाइजरी रिव्यू भी है और मार्केट डिसिप्लिन भी है. ऑपरेशनल लिक्विडिटी नहीं होता. सो बी इज गोइंग टू बी द आंसर, राइट? इफ यू हैव रेड Basel 1, Basel 2 and Basel 3 norms, you would be knowing the answer to this question, and B is going to be the answer. Simple as that. And these are the pillars that are there, right? Minimum capital requirements, right, which is the capital requirement only, supervisory review, and transparency and market discipline. Which of the following are Basel 3 component? Tier 1, Tier 2 capital and capital conservation buffer. So mark your answers, pause the video. Yes, so to this one, E is going to be the correct answer, because we know that Tier 1, Tier 2 capital, and apart from that, capital conservation buffer, right? All these things are a part of the Basel 3 components, right, very importantly, and E is going to be the answer to this question. This was an easy one. 84. In banking sector, market risk mainly arises due to what? Political factors, external factors, natural calamities, internal factors, or none of the above. So what is going to be the answer to this question? So the correct answer is going to be the B option, which is external factors, right? External factors which can involve the interest rate, foreign exchange rate, risk, right? Equity prices, different sort of things, commodity prices, overall market movements that are there. So whatever external factor are there, they're going to impact it. Don't think that it is going to be political factor, because political factor is a part of external factor, right? It may impact market, but they are one part of the external factors only. Mainly it is going to be because of external factors. So B is going to be the answer to this question. Now the operational risk. Operational risk is in an organization arises from which of the following? Question number 85. New regulatory norms, inadequate internal control process, inadequate external control process, strict internal control process, none of the above. So we know that when we talk about operational risk, तो वो internal processes के failure की वजह से ही होता है, right? For example, operational risk can also be of different type, like transaction risk, right? Different sort of risk can be there as a part of operational risk. It can be because of human error also. It can be because of any fraud also. ठीक है, fraud हो सकता है, कोई system fail हो जाए, ठीक है, supervision सही से नहीं हो रही है, तो कोई भी internal ऐसे challenges है that can lead to this operational risk related challenges, and B is going to be the correct answer to this question. Now question number 86. A developing nation is looking to attract foreign investment to boost its economy. The country's leaders are considering offering incentives to both FDI and FPI. The country's priority. अब country की priority देख लो. सबसे पहले उसको economic growth चाहिए, job चाहिए, टेक्नोलॉजी चाहिए और इंफ्रास्ट्रक्चर डेवलपमेंट, ये सारी चीजें होनी चाहिए. तो ये बताओ कि विच टाइप ऑफ फॉरेन इन्वेस्टमेंट एफडीआई और एफपीआई इज मोर लाइकली टू अचीव कंट्री प्रायोरिटीज. अब देख लो यार, एफडीआई हमें पता है, एफडीआई वी नो इट इज फॉर द लॉन्ग टर्म, right? And with FDI, what happens when a foreign country invests in the other country? For example, if any American country is investing in India, what it is going to do? It is going to invest for a long term, first of all. Secondly, since it is investing for a long term, it will lead to job creation and it is going to contribute to the economic growth. Apart from that, it is going to bring the technology also, which means the infrastructure development is also going to be there, right? So these sort of things can be achieved through the FDI, not FPI. FPI is highly volatile in nature, right? It can dominantly include some sort of, I would say, hot money when we talk about FPI, but on the other hand, FTI is more stable as compared to FPI, right? So FDI is going to be the answer to this question, which is the B option. Now the next one is ROI. So ROI, return on investment, is a very important measure for a company to find out whether it is going in right direction or not. What type of parameters? Parameter ratio return on investment is? What type of parameter or ratio return on investment is? So A, liquidity, B, profitability, C, insolvency, D, turnover, and E, none of the above. This is an easy one, because when we talk about ROI, right, when we talk about ROI is the ratio of net profit to investment, right, into 100, you can say. So what you're getting over here, you're getting the entire profit. You are calculating the entire profit in context to the investments that you have done, right? So it is clearly indicating the profitability in this scenario, right? Not the liquidity ratio, because liquidity is for the short term, I would say, in order to meet the short term obligations, right? But it is primarily related to profitability, because net profit is something that we are going to calculate in context to the investment, right? It is going to measure the profit of a company that is earning in context to what investments it has done, right? So it is going to be the profitability. It is also not going to be solvency, because solvency measures the long-term financial stability of the company. It is not going to be the turnover ratio, because turnover measures that how efficiently the assets are performing, right? Or the how efficiently the inventory is being used. So these things are seen as a part of turnover ratio, but this ROI is primarily linked to profitability. So B is going to be the answer. Question number 88. From the following details, calculate the return to asset ratio. So it is asking about return to asset ratio, It is saying income is 100 lakh and the asset is 500 lakh. So what is going to be return to asset ratio? This is an easy question, right? We know that if we talk about return on asset ratio, it is going to be income divided by asset, right? It is a ratio of income to asset into 100, you can say, परसेंटेज में कैलकुलेट कर सकते हैं. तो इनकम क्या है आपकी 100 लाख है, asset is 500 lakhs into 100 you can do, right, which is going to be what, 5 2s are 10, it is going to be 20%, right? So C is going to be the correct answer to this question. Simple as that. Now question number 89th. Based on the given information, answer the following questions. So take your time, pause the video and try to answer it, where we have provided you different numbers, different parameters. Reserve 6 lakh, equity 4 lakh, debt to net worth 0.5 दिया है, एसेट टर्नओवर रेशियो दिया है 2:1 और ग्रॉस प्रॉफिट दिया है आपको 30% ऑन सेल्स. ठीक है, तो ये सारी इन्फॉर्मेशन दी है और हमें बोला क्या निकालने को, ये आपका ग्रॉस प्रॉफिट परसेंटेज है. एंड क्वेश्चन में बोला है कि व्हाट इज द ग्रॉस प्रॉफिट, राइट, व्हाट इज द ग्रॉस प्रॉफिट इन दिस केस, एंड द डिटेल्स हैव बीन प्रोवाइडेड टू यू विद रिस्पेक्ट टू डिफरेंट पैरामीटर्स, राइट. तो जो दिया है सबसे पहले वो देख लेते हैं. रिजर्व्स मिले हमें और इक्विटी मिली है 4 लाख, राइट. और रिजर्व और इक्विटी को यूज करके हम क्या निकाल सकते हैं, बहुत ही आसान है. ठीक है, बहुत ही इजी है. हम यहाँ से नेटवर्थ निकाल सकते हैं, बिकॉज वी नो डैट व्हाट इज नेटवर्थ. नेटवर्थ इज द सम ऑफ रिजर्व्स एंड इक्विटी, राइट. सो व्हाट आर द रिजर्व्स? रिजर्व्स आर 4 लाख, इक्विटी इज व्हाट, 6 लाख. सो नेटवर्थ कितना हो जाएगा हमारा? नेटवर्थ हो जाएगा हमारा भाई 10 लाख. ठीक है, एक सेकेंड, 1 2 3 4 5 एंड 10, यस 10 लाख रुपीज. दैट इज गोइंग टू बी द नेटवर्थ. उसके बाद जो नेक्स्ट इंफॉर्मेशन दी है, इट इज सेइंग डेट टू नेटवर्थ. सो डेट टू नेटवर्थ कितना दिया है हमें, देख लेते हैं. डेट टू नेटवर्थ वो दिया है हमें 0.5, राइट. सो इफ यू जस्ट पुट द वैल्यूज ओवर हियर, सो डेट डिवाइडेड बाय नेटवर्थ इज इक्वल टू 0.5. ठीक है, तो डेट इज टू नेटवर्थ इज इक्वल 0.5. तो डेट क्या हो जाएगा, 0.5 इंटू नेटवर्थ. ठीक है, ये वैल्यू यहाँ पर चली जाएगी आसानी से. सो डेट क्या हो जाएगा हमारा, 0.5 इंटू 10 लाख रुपीज. तो ये कितना हो जाएगा हमारा, आसान है. इट इज गोइंग टू बी व्हाट, इट इज गोइंग टू बी 0.5 इंटू 10 लाख विच इज गोइंग टू बी 5. ठीक है, तो 5 लाख हो जाएगा ये, 2 3 4 5. सो ये क्या हो गया हमारा, डेट आ गया. सो लेट मी जस्ट write it precisely. So ये आ गया हमारा net worth, this is the first value. ये क्या आ गया हमारा, ये आ गया हमारा debt. ठीक है, now let us move forward. Okay, so after that what has been provided, after that it is also giving us asset turnover ratio which is 2:1, right. So इसके बाद यहाँ लिख लेता हूँ मैं. So asset turnover ratio क्या है, asset is to turnover ratio which is given as 2:1, and which basically means that if you try to calculate sales, it is going to be 2 into asset, right. I hope you all know that these are the basic things. So sales is equal to 2 into asset because asset turnover ratio is 2:1. So sales क्या होगी, sales हो जाएगी यहाँ पर 2 into हमारा asset कितना है. asset देखिए हमें कितना रखा है. ठीक है, asset हमने निकाला ही नहीं अभी, तो asset निकाल लेते हैं पहले. total asset क्या होगा, total asset क्या होता है, total asset का फॉर्मूला क्या होता है, it is net worth प्लस, और क्या होगा एसेट में, डेट भी इंक्लूडेड होंगे एसेट में, तो डेट लिख लेते हैं प्लस डेट. सो इट इज गोइंग टू बी व्हाट, इट इज गोइंग टू बी 10 लाख जो कि हमारा नेटवर्थ था, प्लस डेट कितना हमारा 5 लाख. तो टोटल एसेट कितना हो जाएगा हमारा 15 लाख रुपीज. ठीक है, सो दिस इज गोइंग टू बी द थर्ड वैल्यू. लेट मी जस्ट राइट इट प्रॉपरली. सो टोटल एसेट क्या हो जाएगा हमारा 15 लाख. तो ये होगी हमारी थर्ड वैल्यू. तो अब निकाल सकते हैं हम, right. Now we can calculate the sales. So sales is going to be 2 into assets. So 2 into what, 2 into 15 lakh, right. So sales क्या हो जाएंगी हमारी, sales is going to be 30 lakh, right. This is something that we have calculated. अब क्वेश्चन में क्या पूछ रहा है, क्वेश्चन हमें ग्रॉस प्रॉफिट पूछ रहा है और हमें क्या दिया हुआ है, ग्रॉस प्रॉफिट ऑलरेडी हमें बताया हुआ है कि वो है 30% ऑफ सेल्स. ठीक है, तो इसीलिए हमने सेल्स निकाली ऊपर, क्योंकि ग्रॉस प्रॉफिट का रिलेशन इस तरीके से दिया. सो वी कैन कैलकुलेट इट एज 30% ऑफ व्हाट, 30% of course 30 lakh. So if you write it like this, 30 upon 100 into 30 1, 2, 3, 4, and 5. And if you calculate it over here, so it is going to be 9, 3 into 3, 9, and 1, 2, 3, 4, and 5, 0, which is going to be 9 lakh 5. So this is going to be a gross profit, and this is going to be the answer to this question. So if you see the options, so C is going to be the correct answer. Okay? So that is going to be the answer to this question. And I hope it is clear to you how we have applied the formula and कैसे एक step by step manner में we have calculated. So C is going to be the answer. I hope you got the same answer, those of you who have calculated. So let us move on to question number 90. So based on the given information, answer the following question. अब यही information आपको दे दी है, but यहाँ पर आपको total liabilities निकालनी है, right? You have to calculate the total liabilities of the company. So how we are going to calculate the total liabilities? तो सबसे पहले we are being provided with reserves, which is 6 lakh. ठीक है, ये हमें पता है, तो दोबारा लिखने की जरूरत नहीं है. Let me erase it. तो रिजर्व्स हमें पता है, इक्विटी हमें पता है. सो यहाँ पर भी हम सबसे पहले क्या कर सकते हैं जो हमने पहले वहाँ किया था, वी कैन कैलकुलेट द नेट वर्थ. So what is going to be the net worth? As I told you earlier also, net worth is equity plus reserves, which means equity is what? Wait a second. Yes, here also it was 4 lakh only. Fine. Yeah. So equity is going to be 4 lakh and reserve हो गया हमारे 6 lakh. So net worth यहाँ क्या हो जाएगा? यहाँ पे 10 lakh हो जाएगा. Right? It is going to be 10 lakh. अब फिर से वही देखो, debt to net worth कितना है? Debt to net worth दिया हुआ है हमें 0.5. राइट, तो पहले भी ये दिया था. तो अब हमें क्या निकालना है? हमें डेट निकालना है. राइट, सो हाउ यू कैन कैलकुलेट डेट? इफ यू विल कैलकुलेट डेट, यू कैन राइट इट एज 0.5 इंटू नेटवर्थ. ठीक है, ये डिनोमिनेटर वहां चला जाएगा, मल्टीप्लाई हो जाएगा. सो इट इज गोइंग टू बी 0.5 इंटू 10 लाख. राइट, हमारा नेटवर्थ 10 लाख था. सो इट इज गोइंग टू बी व्हाट? इट इज गोइंग टू बी 5 lakh rupees. I hope this is clear to everyone. Now what we are going to do, we are going to calculate the total liabilities. So if you try to calculate the total liabilities, right, total liabilities में क्या क्या आएगा? एक तो आ जाएगा net worth और एक आ जाएगा debt. So net worth कितने हैं हमारा? net worth हमने निकाला है जो कि है हमारा 10 lakh plus debt कितने? 5 lakh. So it is going to be what? It is going to be 15 lakh. So 15 lakh is going to be a total liabilities, right? So 15 lakh is going to be the answer to this question. If we see over here, I think यहाँ पर भी हमने, अच्छा ठीक है, यहाँ पे हमने total asset निकाला था. All right. So here we have calculated the total liabilities, which is going to 15 lakh rupees. So C is going, D is going to be the correct answer to this question, right? D is going to be the correct answer to this question. All right. Moving on to question number 91. Which of the following phenomena includes high inflation and high employment? So of course the answer is going to be what? We know that it is going to be stagflation, because during the stagflation what happens? We have stagnant economic growth plus high inflation that is there. Stagnant economic growth and high inflation that is there in the market, and because of this what happens? There is huge unemployment. Right, because companies are not able to survive because the economic growth is not good, inflation is high, so in order to bear their expenses they will have to fire individuals, fire the workers from the jobs, and that will lead to high unemployment also. So D is going to be the correct answer to this question, right? So these are the three characteristics of stagflation that you need to know: stagnant economic growth, high unemployment, and high inflation, of course. The base year for revised series of WPI is what? So you would be knowing that it has recently been updated to 2022 to 2023. So B is going to be the correct answer to this question. What is the target set by RBI for CPI based inflation till 2021, right? So it is 4 plus minus 2%, and recently this MPC meeting happened and the same target has been set, right? So the target was supposed to be revised, but they did not, and they have kept it 4 plus minus 2% only. So A is going to be the correct answer. Shelf prospectus is valid for maximum how many months or years? So 3 months, 6 months, 1 year, 2 years, or 5 years. We know that when we talk about shelf prospectus, it is valid maximum for 1 year only, right? Which is 12 months, and that is going to be the answer. I hope you have marked it correctly. This question was very basic. Now the last question for today: in India, who regulates mutual funds? So we know that mutual funds are regulated by SEBI, right? So B is going to be the correct answer to this question. I hope all of you have marked most of the questions correctly. and I hope it is clear to you. So that is it from my end for today. If you want to download the PDF of this session, what you can do, you can go to the Telegram channel and you can download it from there. I hope it is clear to you. So thank you so much and all the best for your exam. We will keep on bringing some session in the future also in the form of marathon and other descriptive based sessions too.